If you just joined this week, welcome, 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 welcome to the club. So the purpose of this group is to just kind of network and to share resources. It does have a legal focus because it was created by me and I am an attorney. So we're going to talk about a lot of legal stuff, but we're going to talk about just the general obstacles and things that can come when you are trying to build a business out here. So, if you don't know, the tax deadline was actually changed from normally it's April 15th, and it was actually changed to July 15th due to COVID. So, we're actually about a month out from the first deadline to file your taxes. And that included business taxes and corporations. Now, you can file for an extension in October, and you would have to just file saying you would like an extension, perhaps citing the reason as to why you have an extension. Now, the thing about extensions is that it doesn't necessarily change that you owe or have a liability. The extension basically allows you to have more time to pay it and to file, and there's usually a fee that is associated with that. If you haven't filed for your small business and you have an LLC or you have a corporation, then I would definitely recommend that you go ahead and sit down and start that process. You may find that as you begin that you have quite a bit of information and records to kind of bring together. Now, before I get into deductions and I start talking about the different types of deductions that you can take from your business, the first thing I want to say is if you don't have a business account, I would strongly recommend that you go ahead and get one. The reason you want a business account is because it's going to allow you to separate your personal funds from your business funds. Okay, so even if you are operating and it's just like, oh, it's just me, there's no one else, you should still open up a business account. Now, to open up a business account, 9 times out of 10, you're going to need an EIN number. I'm saying 9 times out of 10, but I'm pretty sure it's 10 times out of 10. You're going to need an EIN number, which is an employer identification number that you would get from the IRS if you are operating as a business. Now, if you're a sole proprietor, you are able to get an EIN, but if you've been around or maybe you don't know, I would never recommend anyone to do sole proprietorship because it doesn't have the same benefits as an LLC, and you're just putting yourself in a very precarious situation. I would always recommend that you open up your LLC, get your EIN number, and open up a business account just so you can take advantage of some of these tax deductions that I'm going to talk about. It also makes it easier for record keeping purposes. So that's just a little disclaimer. We can always talk about LLCs and businesses and how to set up things to benefit you, but today we're going to finally get into it. We're going to talk about tax deductions. So I want to make it clear, I do not do bookkeeping personally. So some of these recommendations that I will be making in regards to monitoring or keeping track of your taxes, please keep in mind that I am not a bookkeeper, I am an attorney, so most of the time what I'm going to assist you with doing is setting up your deductions, processing it, seeing what you need to set up, and how we can strategize to maximize your tax liability, right? Because no one wants to pay a bunch of taxes. So tax is a very broad topic. So please also keep in mind that I will not cover everything, but I will cover majority of the deductions that are usually applicable to small business owners. Yes, I know, tons and tons of disclaimers. I'm an attorney, what can I say? Okay, so let's get into it. All right, so first of all, I want to begin with anything can technically be deductible or deducted. Please be mindful that just because anything can be deducted doesn't mean everything should be deducted. And that's a very strong distinction. There are 2 types of deductions. You can have capitalized expenses and you can have deductions. If you see me glancing down, I just have a notepad so I can keep everything in order. Okay, so don't mind me. Okay, so you can have regular deductions and you can have what is called capital expenses. So deductions are usually going to be things that are happening within that time, and that full amount will be taken in the year in which you filed the deduction. Capital expenses often will be amortized, which means that the deduction will be taken over a period of time. So even though you may have bought the purchase or you may have bought the equipment in 1 year, you would spread out the deduction over several years. You see this often when you're buying big, expensive equipment, because the IRS limits purchases for large purchases, the amount in which you can deduct within that given year. Now that is within the code, and so if you have a particular question about certain purchases or things that you have made and whether or not it'll be amortized, you would talk to an attorney or an accountant, or you could always pop open the IRS code to see what you would need to do. When I am having discussion, please be mindful that I'm just going to use the word deduction, even when I'm discussing capital expenses. Distinguishing between the two will be something that you would have to do based off of how much it costs. So one of the deductions that you can make in your business is in regards to, anything that is ordinary or quote unquote necessary. So what is considered ordinary is going to be based off of the industry standard. So for instance, something that is ordinary for many lawyers would be paying for our bar fees, right? So that's an ordinary and also necessary expense. But for my bar fees, I would not be licensed. If I'm not licensed, I cannot practice law. Therefore, I cannot have a business. Ordinary would also be for a carpenter. You may have wood. For an insurance agent, you may have an office. But a beautician, she may buy wigs, but it wouldn't be an ordinary or necessary expense necessarily for me as an attorney to maybe try to write off my wig, right? I think I would have a hard time convincing the IRS that my hair appointment is deductible in regards to my law firm. So it's really in relation to what kind of business you're doing and how you operate within the business. So one of the main things that I love telling new business owners, and why I say, hey, start that LLC, is that you can actually write off what is called startup costs. Startup costs are whatever you're using to begin the business. It could be your business formation fees. It could be, say, you hired someone like me to help you put your business together. It can be any classes, licensing, any material that you have gathered. If you're renting a space, all of these startup costs can be deducted. And sometimes they can be deducted over time depending on how much you spend. And it doesn't even matter if your business made a profit, you can still deduct it. It also doesn't matter if the business has failed, you can still deduct it. Now the caveat is when you are deducting startup costs, you have to deduct it from the time that you decided to make it a business. So this is where being decisive and moving forward and declaring yourself as a business is very, very beneficial. So if you are moving forward and say, for instance, you're putting your business together and you just haven't quite decided if you want to make it a business, indicators of making a business would perhaps be making a separate name from yourself, selling the goods at a higher rate than just like a hobby, creating an LLC. These are all indicators that you are trying to create something that is a business. So if you took 6 months to decide to start your business, then you would only be able to deduct the startup costs from the time that you actually started operating and positioning yourself as a business. So that is just something to be mindful of. When you're doing your startup costs, make sure you keep your receipts. Make sure that you keep everything that you pay for, because you can deduct it. The next thing that you can deduct from year to year is supplies and materials. Okay, so this is going to be what is called operating cost often. So for instance, if you have a subscription service, because perhaps you have a Squarespace website, right, and you're paying for that yearly subscription, you can deduct those costs. You can also deduct anything in regards to expensive of just running the business, buying paper, staples, pens, all of these supplies and materials that are necessary in order to run the business can all be deducted. So if you have a bunch of platforms that you're perhaps paying for, then you want to keep track of those. You know, the Canva, if you're paying for, I'm trying to think of like PayPal or Stripe, or maybe you have a Shopify account. All of those fees that you need in order to operate your business are deductible. So keep track of that stuff. And when they send you that statement saying you're up for your yearly or monthly renewal, just go ahead and slide it into a separate folder so that when it's time for you to file your taxes later on, you're able to know where all your deductions are. And if you're working with a bookkeeper, they can also help you put it into QuickBooks or an Excel sheet. But at the very, very least, just slide that statement into a separate folder so that at least you know where it's at and you won't have to scroll through all your emails looking for it. Because they be sending us notices and we don't be paying attention. You know what I'm talking about. Okay. All right. So another thing that is deductible is if you hire an employee or independent contractor. Yeah. So you're growing, you're going, you're feeling good, and you're like, you know what? I need some help. I need someone to be my virtual assistant. I need someone to build my website for me. You can deduct those costs. So sometimes it pays, to pay. You can deduct those costs. So that's why it's really important that if you are hiring someone, that you have the paperwork and you have your paperwork in order. Even if you're like, oh, it's just a couple $100. No, get a receipt, get an invoice, put a date on it. Even if they don't send you an invoice, make up an invoice and have them sign it, right? You want paperwork so that if an audit does happen, you're able to show that you pay this person, even if it's below the rate that the IRS requires for a 1099, because we're trying to get all our deductions. Every single cent counts. All right, so the next thing that I would say that you can deduct is equipment and computers. So most of us, if not all of us, are using some type of computer. You might have a printer, maybe you've got a fax machine. I don't know your life. But if you're using this type of equipment that's necessary, like for instance, I have clients who create t-shirts, and so they have like a t-shirt, press machine thing. I know that's not the right name, but it's a t-shirt press machine thing, and it presses the designs in the t-shirt. They could write off or deduct that equipment as part of their business expenses because they're running a t-shirt business. So equipment can be deducted. So what can be deducted? Startup costs, supplies and materials, employees and independent contract, and equipment and computers. Oh, we are just flying through these deductions. I hope you're writing them down. I hope you're keeping track, and I hope you're thinking about, I need to go back and get some of these receipts. Okay. The next thing that you can deduct is rent, even if you have a virtual business. So what does that mean? So say we have the traditional rent, which means that you have an office and you rent out a space. You might rent out a workspace because those are very popular now. You might rent out an office within a workspace, or you might have your own office yourself. You can deduct the costs for the rent for that office. Now, if you are like many employees many entrepreneurs or small businesses where you are a virtual business and maybe you're renting a mailbox or you're renting just a space for your mail to be received, that is still considered rent. So you're able to deduct that money that you are spending for your virtual address. Isn't that cool? Yes, you can deduct that every year, every month. Keep the receipts, keep the invoices, and like I said, go ahead and slide it into that folder if you don't already have a bookkeeping system set up. And we're not going to talk about that today, but if you don't, at least slide it into a folder so you can find it later. Okay? The next thing you can deduct is utilities. Now, this is only for utilities for an office outside the home. Okay, you can't take your apartment's electric and be like, I'm deducting it. No, that's not how it works. It has to be an office outside of the home. It also would not be, you also cannot deduct utilities for utilities you're not paying for. So if you have an office and you are doing like a co-working space, then utilities wouldn't apply to you, right? Because you're not paying utilities, you're just paying rent. So don't get tricky with the IRS because you don't want to audit and you don't want to have to pay something back because you decided you were trying to save a little bit of money for the $30 in utilities. So utilities only applies for offices outside of the home. Now, another expense that people love to talk about is travel expenses. Okay, so yes, you can deduct travel expenses in relation to your business. Now, you are also able, when you are traveling, to take personal time during that trip, but you have to split the amount of time. So for example, if you decide you want to go to Chicago because Chicago has a seminar that is relevant to your business and field. So you go to Chicago, the conference is 3 days, but your auntie's in Chicago. And you're like, you know what? I want to visit my auntie. So you stay in Chicago for an extra 3 days, making your trip 6 days. So you would only be able to deduct the time that you spent of the trip that was purely business. You would not be able to deduct the full 6 days. And this is where people can get in trouble because they feel often, oh, well, I'm working throughout the day, I'm working here and there, and so that counts as a business trip. But I would say be mindful, and I would be wary of that. If you can't produce a receipt or evidence showing that those 3 days were truly part of business or business related, then you could find yourself in a little bit of a pickle. Okay, so if you're going to do that, just be mindful that you need to be able to prove that this was a 6-day business trip. But I would say err on the side of caution, get your deduction for the 3 days, and enjoy your time with your auntie. Okay, so a lot of times when people are traveling, they want to talk about the food, right? Because that is whole joy. If you're in Chicago, you know you're gonna get some deep dish pizza. It's gonna be delicious, and you want to be able to write it off. So what kind of food can you write off? You can write off meals that are in relation to you doing business, or if you are, for example, meeting with a client. Now, they have been trickier in the past. The IRS has changed it to where it used to be a full deduction. Now it is a 50% deduction. And the other thing is, if you're traveling for business and you don't use, like, say you're really frugal and you're like, you know what, I don't want to spend a bunch of money while I'm on this business trip, you're actually able to give yourself a per diem. If you don't know what a per diem is, that basically means there is a pre-designated amount of money that you will receive that day. And if you don't use it, you're still able to take that deduction. Now, you would have to go to the IRS to see what that particular deduction is for, or what that per diem would be. But that's awesome, right? So even if you don't eat a bunch of food, you can say if your per diem is $50 and you only spent $20 that day, you can still get a deduction of $50 like you ate $50 that way. Isn't that so nice? The next thing that, well, let's just take a moment, right? Because I've been talking and I'm out of breath. Are you out of breath? Because we're going through this information. So if you have any questions, make sure you comment. Make sure you let me know. Let me know if you're still here. Okay. All right. So we talked about startup costs. We talked about supplies and material. We talked about equipment. We talked about rent. We talked about utilities. And we talked about travel, because that is the whole benefit of being an entrepreneur. We can take our business to go. We can work anywhere. Well, a lot of us can work anywhere. Okay. So another thing, another one. Insurance, right? So if you're paying for insurance, whether it be product liability, whether it be health insurance, you can deduct it. Isn't it awesome? So you're protecting your business, you're protecting yourself, and you can deduct it. It's like a trifecta. It's wonderful. So make sure you keep in track of your premiums, how much you're paying, and how often you're paying. This is really helpful when you have a business account. This is why I recommend a business account at the beginning of the live, because then you can pull your statements and you can see, oh, I paid this much in premiums, I paid this and this and this. Now, again, this is not a suggested bookkeeping policy. I would recommend that you actually have a procedure for bookkeeping. But if you're like a lot of entrepreneurs, at least make sure you're doing all these purchases through your business account so you can track where your money is going. So if you don't have insurance and you're afraid to get insurance, it can be deducted. The next thing is a biggie, right? Everyone knows about this one. Mileage, right? You can deduct mileage, but you can't deduct all mileage. All right. So this is how it works. You can deduct mileage in relation to your business. Okay. You can deduct it per mile. The IRS has mileage at about 58 cents for this year. So like I said, the deadline's not till July 15th. So if you haven't filed your taxes yet, You can still try to calculate your mileage from 2019 for this for filing your taxes in July 15th and take advantage of this deduction. If you don't have the data for it, you can always do it this year. It's never too late. It's never too late. Now, there's a couple things that you should know. Number one, mileage does not count in regards to you coming from your office to your home, right? It doesn't. You cannot count mileage for that. I know you want to, but you can't. There is an exception to it, and we'll talk about it in a moment, but that is not considered mileage. You also, mileage has to be related to your business. So you going home to see your parents, and then maybe taking a business meeting, you wouldn't be able to write off all that mileage if maybe you drove for 3 hours and then you happen to maybe meet a client there. You really want to look at what the purpose of the trip is. Now, if there's multiple purposes to the trip, it's just similar like travel. You want to deduct the amount that is equivalent to what is related to the business. Whew, that was a mouthful. So think about it this way. If you are riding somewhere or driving somewhere and you're utilizing mileage, would you say that mileage is for business or would you say that mileage is for personal? And be as honest as possible. There are several apps that are available that will actually track the mileage for you. And as soon as you get in your car, it will automatically start calculating the mileage. And then you're able just to put in if it's personal, if it's business, etc. So if you're interested in that, I would definitely look into that, because keeping track of that by hand is very difficult. Okay, so I did say there's an exception to the mileage from business, from your office to home. So one of the exceptions is if you have a home-based office. If you have a home-based office and you're driving from your office outside your home to the office inside your home, you can actually calculate those mileage and say that they are deductible because you have a home-based office. Now, there is parameters that are required to have a home-based office, and unfortunately, we're running out of time, so I'm not going to be able to get into that today, but we'll definitely do a segment talking about what constitutes a home-based office and how to make sure and prove to the IRS that you do have a home-based office and you're not just, saying it. So there's a couple more things that I want to cover real quick. So you also can write off advertising costs. So if you're running Facebook ads, Instagram ads, if you are running just regular old ads, TV ads, billboards, all the advertising and marketing can be written off as a deduction, 100% full mark off. Anything that you're using in regards to credit card fees. So if you're processing, we know most of the credit card processors actually charge you a percentage or some type of fee when you're running cards. You can actually get a deduction for those fees. And last but not least, there are other deductions that I can cover, but you can also write off educational costs. So educational costs would include continuing education. For example, if you are required to take classes every month to keep your license, every year to keep your license. If you want to invest in yourself and say, hey, I'm going to know this new strategy, or I'm going to take this class to improve on myself, then you can pay for that. Even if you were taking perhaps like a coach is offering a course online and it's relevant and relative to your business, you can write off the cost of those education costs. You can also deduct tax preparation services. So if someone prepares your taxes for you, you can actually deduct them preparing your taxes. Okay, so those are some of the things that you can deduct. Now, if you're planning for your next year and you're planning for this year, you want to go ahead and track your mileage now. That's such a great deduction and it's really easy to take advantage of. So go ahead and find yourself an app such as Mile IQ that will allow you to track your mileage and take advantage of this amazing benefit. The second thing you want to do is maybe look into contributing to an HSA, which is a health savings account. This is especially relevant if you have an insurance plan that has a high deductible. You could perhaps think about how much, or if you have a constant prescription that you use, or if you know you're going to have a certain amount of appointments, an HSA is deductible and it can really help with reducing your tax liability. If in doubt, you can always hire someone because like I said, you get, if you pay someone, then it's a benefit to your business because you can deduct that. If you are making the big money and you think you're ready, then you should think about changing your LLC designation to an S Corp. And if you don't know what an S Corp is, feel free to hit me up and I'll be happy to go through it, or we'll have a session about it. But if you're bringing home the bacon, then you should definitely consider opening or talking to an accountant or attorney about starting an LLC. I'm sorry, not starting, but changing your designation for your LLC to an S Corp. So if you start making the money, you always want to think, if you make more money, then you want to reduce your tax liability as much as possible. And now that might require some strategy, right? You might have to think about maybe doing higher expenses, or how to give certain money or buy certain equipment, or kind of strategize when you buy something, when you'll give something, in order so you don't have to pay so much money to the man, right? And you can always talk to an accountant or an attorney such as myself, who could probably help you, walk you through that process. Now, there are a ton of deductions, y'all, a ton. And I have only scratched the surface of the amount of deductions that are available to you as a small business and entrepreneur. If you did not catch at the beginning, make sure that you have an LLC, make sure that you have an EIN, and go ahead and open up a business account at the very least, so you can start taking advantage of these small business deductions for your tax liability. I hope this has been helpful, and if you have any questions, or you're just like, man girl, that was so helpful, comment below.